All right, Ken Range Theory Trader back with you on another video. Just talking about a weekend review, so very informal. Today we're just looking over the week of I believe it was the 17th. Let me take a look to be sure. Well, you can say the 16th if you want. Sunday through Friday, the 16th of February through the 21st of February. So just, Sunday, Monday through Friday of February 2025. So let's get into it and see what we see. So I just marked the only trades that I saw that did play out. So let's take a look at this and see. So first we have Swiss yen. Starting with the week on Monday, obviously we had an ATR candle here, but price failed to close back inside the range. So there were no money candles, no anything starting the week. So price started on a steady downtrend until we finally did get a ATR candle on Wednesday, the 19th. And this was a 5 p.m. ATR candle. So, you take what you can get. 5 p.m. isn't my ideal time to see an ATR candle. I like to see them at 9 p.m., 1 a.m., or 5 a.m. Eastern Standard Time to pretty much coincide with either Asia or London session. But this one gave us one here at the 5 p.m. hour. So we had, I guess, what you could construe as a money candle here, but it closed a little bit outside the range. And as you can see, price continued downward through Thursday. So anyone who went long here had to sit through quite a bit of drawdown up to, let me see how far this went down. I mean, you're talking about in excess of 60 pips. So I wouldn't want to sit through that. So a good approach to use is if the close is iffy, then just wait till you actually get a solid close on the 4 hour or on the 1 hour chart. So for the yen pairs this week, for the most part, a 1 hour would have been okay. And your ideal entry would have been right at market close on Wednesday rather, like Wednesday 4:45 or so. I'll drop down to the 1 hour chart so you can see in one example of this, but I won't do it for the rest of them because it's just not necessary. So let's see. Yeah, like right about here. This is 4 o'clock, right in there, because we like to be in close to the range bottom if we're going long or close to the range top if we're going short. I'm not talking about taking this though. I don't trade the range both ways. I only trade it going one direction. So if we go back out to the 4 hour chart now, okay, so that entry would have been right there. You would have had a little bit of drawdown, but ideally your stop loss should go below this prior candle. Sometimes with the spread, it would be possible to get stopped out on this trade. So you really just have to watch your position sizing here. Set a pricing alert, but either way, price did go up. Let's see. That was good for 80 pips on that one. And the whole total range was about 87 pips. So price did clear the range. And then once again, like I said, I didn't take this trade to the other side. Just I don't trade like that. I don't trade both sides of the range. So this one long here is fine. So once again, you just wait till price closes back inside the range to go long if you're unsure about a money candle. So let's see. The most of the yens were pretty much the same thing, where things didn't really work out till Wednesday. So once again, here would have been the ideal trading time frame in about the 4 o'clock hour, somewhere in there, close to the bottom of the range. And once again, price did pretty much, stop out anyone who went long here, and then finally started to boom, come back up, shifted back up here into the range right at the end of the session on Wednesday. So pretty much locked in there, a bit of a retrace, and then boom, came back down. So this one played out for pound yen of 103 pips. Okay, on the euro, like I said, same thing. ATR candle, 5 o'clock. Best entry would have been here. Well, let's move this over one. Same thing in about a 4 o'clock hour. So let's drop down on this one to see what the 1 hour was looking like. Let's see. Well, okay, 2 o'clock could have given a decent entry. You could have entered here long at the beginning of this 2 o'clock candle here. And again, if long as price stays inside the range, we like to see that, which it did do. And this would have been good for 81 pips to the top of the range. Okay, so that was that one. Aussie was a little different because it did actually have a confirmed money candle where it did poke below the range and close back inside of it. I can't believe I missed this one, but when you know better, you do better. When you have money candles like this, you want to wait for a 50% retrace. So you just reuse the fib, draw from the top of the money candle to the bottom, and you want to enter anywhere below, at or below the 50% line if you're going long. So let's drop down to 1 hour and see where our best entry would have been. And for the sake of this one, we'll say anywhere around 1 a.m. Yeah, getting in about 1 a.m. to 2 a.m., somewhere in there. Right, 2 a.m. would have been the best entry, absolutely. Right here at the open of that 2 a.m. candle, and you pretty much had a zero to little to drawdown trade, and it did play out for, let's see, that was good for 68 pips. New Zealand played out pretty much the same way, where we had a bigger size money candle. The challenge with these is always going to be patience, because when you see a money candle like this, or I'll be transparent, when I see a move like this, when I see the ATR candle, then the money candle pretty much shift all the way back into it. It doesn't really cross my mind that, oh yeah, I can wait for it to retrace. I'm thinking, oh man, I missed the trade because the price is all the way up here and I like to be in closer to the bottom of the range. But no, don't let the money candle size fool you, or think that you can't catch a retrace. It's not guaranteed to retrace, but when it does, we just need to know what to do. So same thing right here. You could have got in around one or so on New Zealand. Again, that would have been good for 58 pips. And then a couple more pound Aussie. I did take this trade and make it. It's on my Twitter. So this one here gave us an ATR candle at on Wednesday at 9 p.m. And then no money candle. Okay, so this is a money candle right here because it did spike below the range and close back inside of it. But then as you can see, price did continue to drop a little bit and pin the bottom. But when you see pins outside the range, that is a good sign that it's pretty much stopping out anyone who did get long. We ideally like to wait for all this to be over. So, you do have plenty of opportunity to get in. Like you could have got in here at the 9 o'clock hour, here, like close to the range, even here at 1 p.m. I got in around 1 a.m. hour below the daily open of Friday, which is today, the day I'm making this video. And so one trick to use as well is that, if the week is ending and you see prices close to the bottom of the range, like it was here, as long as if you're going long below the open of the day and above the range of the candle, I'm sorry, above the range of the candle range that I'm trading, then you're good. Of course, obviously you don't want to see price go outside the range, back outside of it. But that's pretty much the trading area. I'll draw a little box here just so you can see that. So once again, if you've missed the best move right here, if you can get in below the daily open and above the low of the range, if you're going long, that's fine. You can do that, and your target is always going to be the top of the range. I did get out a little early because I thought that price was going to bounce off this weekly open here and come back down, but obviously it went back up. And this was good for 74 pips. And so that was pound Aussie, and then Euro Aussie pretty much played out the same way, where we had our close. The first close back inside the range actually came right here at 5 a.m. So this would have been a decent entry. Price did spike this low, and then you got another chance to get in here on Friday. This was on Thursday, and then Friday gave us another chance to get in below the daily open, but above the price, below the candle range low. And this went up at its max about 77 pips or so. So that was that. And that was the weekend review. This again was the ATR candle was 65 pips. So if a range is below 50 pips, I really don't bother trading it. This week it wasn't a good week for me trading wise, but the end of the week really ended stronger than the beginning, because as we can see, Monday through, I'd say Wednesday, really didn't give much, just a steady downside move. This one right here would have been a loss if I tried to go long there. As you can see, price continued down. But eventually, Wednesday, Thursday Wednesday, Thursday can lead to a retrace, depending on if the pair decides to just go that way. But it just depends. But always, step number one is you want to identify your trading range, and then just trade the price to the opposite side of that range. So these were all longs. I didn't really see any shorts that were trading this week, but that was it. So the yen and the Aussie gave the best setups. So please feel free to subscribe to the channel, follow me on Twitter, and appreciate your time and attention. You have a great rest of your day.